The Dapper Dividends podcast is on the air. Hey, what is up, everybody out there? Thank you for coming on back. Welcome back. Welcome. Oh, Mr. Cotta. Dude, is that going a little bit too far back? Nah, I think most people that listen to this are old enough to know who Mr. Cotter is. Anyway, I'm Russ. What's up? Thanks for coming back to the podcast and special episode here. All y'all on YouTube land that can see me, if you're listening to the podcast, you can click the link in the description below and check this video out on YouTube. I'm throwing it up there. No, I'm not throwing it up. I'm putting it up on the old YouTube machine. So again, exciting episode here. We got some pretty big news with a couple dividend stocks that I love. We've got Kellogg splitting, Altria's dipping, crypto's slipping, and whatever else ringing and inging and dinging that you want to go with. And you know what? I'm also going to give you, for the low cost of nothing, I'm going to throw in a dividend hike as well. Dude, speaking of hikes, I was just driving home on the tri-state, and it's almost Independence Day here in the Chicagoland tri-state area. We have a place called Crazy Kaplan's just over the border in Indiana. And talk about inflation fighting. Dude, you can get 4 Roman candles for the price of 1. That, my friend, is helping you fight inflation while you blow up your money. Quite literally blow up your money. Yeah, we're stumbling, bumbling, rumbling, but we go full speed ahead for 30 minutes. There's no stopping. We leave in all the muck-ups, all the goof-ups. And you know what? I just finished reading a book today. In one day, 7 hours, I read The Alchemist, which is a really interesting book I'd been wanting to read for a while. I read that on the Hoopla app. Now, if you're in the United States, dude, you got to check out Hoopla. If you have a library card, there's Hoopla and there's Libby. Free audiobooks, just not as nice as Audible from our friends at Amazon, but just a wealth of really cool quality free books. I've been revisiting some Peter Lynch books on there. One Up on Wall Street I just read again for probably the 4th or 5th time. But you know what? Hey, welcome back again. You know what I mean? We are just living the dream. A really cool quote was, "It's the possibility of having a dream come true that makes life interesting." That is from The Alchemist. And it's a nonfiction book, which for me is a little weird because usually I'll read, fiction. I always have to revert to Bad Religions. Sometimes truth is stranger than fiction. So fiction. Truth is stranger than fiction. So it's nonfiction where I usually live, right? Anyway, so yeah, we just also, I know I told you guys, we saw Flogging Molly and the Interrupters and Tiger Army at the Aragon Brawl Room in Chicago. Really cool, really fun show. The wife and I took the L, and it's always interesting taking the Chicago L. We got off on the Sheridan platform. We were stopping at the Holiday Club after the show before we took the L back, and we were coming down the stairs. There was a dude walking up the stairs, and this black dude just wearing boxers, no shoes, no nothing, just smacked this kid on the side of the head, and the kid's like, he's like, "What's the matter with you?" And I immediately gave my wife that look, and she knows, because I always tell her we're punching people in the throat. And that's my word to you. Hey, you know what? If it's me or you, you're going to get punched in the throat. I always tell them that. I don't care how big somebody is, what state of mind they are in, what level of inebriation or what drug they're on. But if you punch somebody right in the throat, chances are they're going to have problems breathing. And if somebody's having problems breathing, they're going to have problems messing around with you. So, salute. I'm going to take a sip here. That's how we do it here. A little more laid back, but all right. So that's all part of it. Living life off the spreadsheet. We're going to the Ozarks this weekend. I've never been. We're going to see something new. Swinging by Kansas City. Super excited for that. We're going to the World War I Museum. Big fan of Dan Carlin. We're going to go see his War Remains. Well, not the kids, but my brother-in-law and I are going to go check that out. It's a fully immersive virtual reality thing that they created, and I'm super excited. They say people kind of get freaked out about it. If you have done it, let me know at Twitter, RustyRam78, and let's chat about it. So, have you been seeing this big rally as we've come through? Or is this it? Are we going on the way up? I doubt it, because I looked into some of the numbers and checked this out. From fall of 2007 until summer of 2008, there were 3 rallies of 8%, 12%, and 7%. Now, there was declines of 45% and 51% from the record highs, and those saw rallies of 18 and 24% before the bottom of March 2009. So there's a lot of bear rallies, and they talk about that trapping people. But man, I'm not worried, because I'm investing for the long term. That's what we're doing here. We're investing for that long term, that long game. Decades in mind is what I'm going for. So we're not going to be able to predict the bottom. I don't care what anyone says. Speaking of hot industries and hot markets, Peter Lynch, we were talking about him. He has a saying to avoid hot stocks in hot industries. And crypto, man, I think that's popping. I think that bubble's bursting. So tying in with people predicting things, I had heard several people on YouTube, on podcasts, all around Bitcoin 100K. I don't know, does that mean Bitcoin 100K pesos? Maybe, but it's just that, I know I've said it before, if somebody is predicting, kick them in the you-know-what, because, man, nobody knows the future. Nobody, I don't care who they are, Musk, Bezos, Buffett, nobody knows the future, and I don't know why we like to believe that people know the future. I guess that's just human nature. This damn chair is squeaky. Of course, when I want it to squeak, it's not squeaking. But anyway, so I think the crypto bubble, it reminds me of that .com bubble when I was, in the late 90s. I was around when it burst. I was, 21 years old in 1999. And even though I wasn't directly investing, I remember my uncle's friend quit his job at the Tribune. He was working on the dock, I believe. Maybe he was driving a truck. Anyway, he quit his job to day trade because people were making bank. It was just so easy. You bought anything with a .com and that went up. But, it really does remind me of that. And I think what we're going to see is a lot of these crap coins. I don't want to say the word. A lot of these garbage coins. A lot of this is just going to get wiped out and it's going to go away. And I think, which is kind of why before the big dip here, I was shifting a lot into Bitcoin and Ethereum. Now, you don't need to know a lot about crypto and whatnot, but to me, I think that Bitcoin is trying to act like gold, like a digital gold, and Ethereum is basically like an operating system. It's like the internet. And I think those two are going to survive. I think, 80, 90% of a lot of these others will eventually go away. But, I wrote down a few. There's going to be survivors, right? Actually, I bought 100 shares of Voyager Digital today. It's at like 64 cents. I think I got them at $64. It's a lottery. I don't really gamble, so that's what we're doing. But check out the survivors. You had 3 big ones: Amazon, eBay, and Google, all IPO during that .com bubble. But there was a lot of busts. There was Pets.com, eToys.com, theglobe.com, Go.com, which was a Disney creation. They wanted to compete with Yahoo and AOL, and that failed. Dr. Coop, what's up, Dr. Coop? C. Everett Koop, he was the Surgeon General. I remember him when I was in grade school. He was the dude that, he reminded me of, I used to think that was Colonel Sanders that was the Surgeon General. Dr. C. Everett Koop, he had a website, drcoop.com. That failed, and garden.com were some of the really big ones that ended up just completely busting. But, it's just the way it goes, man. Things come, things go. And when a whole sector gets hot, like I think we've seen it a little bit with the EV, maybe it wasn't as big of a bubble, but it's just, again, I wish I would have sold my shares of NEO. I wish I would have held on to, we won't get into that. So what you came for, the dividend increase. Kroger hiked their dividend 24%, going from 21 cents to 26 cents. Man, that's just a really fat hike from Kroger. Now, grocers, I don't really invest in a lot because they have such thin margins. And I really just have ACI, right? Albertsons, because I just wanted to own Jewel. Luckily, I got lucky with that. They IPO'd a few years. I don't want to put a date on it. I don't remember. I should have looked it up. But they IPO'd maybe about less than 2 years ago, 2 years-ish. They IPO'd. They own Albertsons, Vons, several other brands, and they own Jewel Osco here in Chicago, which everybody's going to be familiar with. We all know Jewel's. You got to go to Jewel's. And I wanted to own Jewel's because it had fond memories of shopping with my grandparents, and just so I bought it, and I've doubled my money on Albertsons. But other than that, I own Ahold Delhaize, Koninklijke Ahold Delhaize, which is ticker ADRNY. They are a Dutch grocer, and here in the United States, I do believe they own Food Lion. Yeah, Food Lion, I think it is. I was thinking of my guy Blue Lion Finance. No, Food Lion. They own. Anyway, so one of the big news articles that just hit actually this week, today when this was filming, they have made it official. The FDA ordered Juul to remove e-cigarettes from market. Look at my notes. You're lying too many on your notes. From the market. And that's a little bit of a blow. Now, yeah, Altria had been writing down a lot of their investment in Juul, but, I think it's kind of crazy that they are banning fruit-flavored vapes and more just vapes, not vapes in general, but taking Juul off the market before cigarettes. I don't know, man. It's just, I'm not conspiratorial, but it seems weird that these cigarettes we know are so bad for you. And I've lost people in my life from lung cancer that smoked the combustible cigarettes. And I don't know why anyone would do it. I know they're really addictive. I know that's why the FDA also kind of hit them with that double whammy that they want to start reducing the nicotine levels, which is what makes it addictive. And, I don't smoke. I do invest in Altria. But Vuse, VUSE, is allowed to stay on. Now, that's British American Tobacco, was cleared. The FDA still has them clearance. They're the tops now, baby. So that's only going to help British American Tobacco making that footprint here in the United States. So in 2018, Altria paid $12.8 billion for a 35% stake, and now that is worth just over $1 billion. They've written off a lot. Horrible investment. They wanted to get into that vape market. So that's what companies do, right? Instead of trying to create their own product sometimes, it's just easier. As I'll wrap this whole shebang up, this whole podcast up with another acquisition. Instead of trying to create your own product, sometimes they just want to buy something that already exists. And with this one, they got a little bit too greedy on that. But really quick on Mo, ticker MO, which is Altria. They have a dividend safety score of 55, and this just keeps making it borderline safe, which is what that is on Simply Safe Dividends. But that dividend yield now, 8.47%. That is a fat dividend. They did dip into the, $41 a share. Now they're at $42.51 as of this recording is where they closed that. But dude, it's still a $75 billion market cap. And they're going to keep, I think they're going to be able to keep paying that dividend. They're still a profitable business, paying 90 cents per share. Now they are due for an increase in August. So that's coming up. We're going to see what that digital, sorry, this is me scrolling, rolling, reading, and talking. It's too many thoughts in my head. So their last was 4.7%. Their last increase was what it was. And their current 5-year average, 6.81%. So that 8.5 is way above the 5-year. And their PE is below. So again, with Peter Lynch, he would say that we know when a stock is cheap by comparing it to its own PE and to the sector PE. So when we do that, check it out. Altria's current PE is 8.6, which is below the 5-year average of 10.9. And the consumer staples PE is 20.3. Altria 8.6 again. So, man, they are just ripe for being bought. And I think a lot of people are going to buy that dip. I'm looking at adding a few more shares. I usually buy on Friday, so I'm going to see what shakes out. I'm still looking to add to building up Snap-on, ticker SNA, and Lowe's, ticker LOW. But Altria has fallen quite a bit, so it's going to be hard for me to not pick up at least one more share on that almost 8.5% yield. Oh, and management did say they want to keep the payout below 80%, which it is currently below, and it is at 79% free cash flow, 73% earnings payout ratio. So I think they're going to be able to keep paying that. And un momento, por favor, necesito un, no sé la palabra para sip. Okay, USA. On to the next one. Number two. We got Kellogg's. Ticker K. Okay? K. No, it is K. Kellogg, ticker K. They're getting in on the splitsies. They're joining in with everybody from, I don't know, we'll just, Johnson & Johnson, we're just talking about, they're splitting off their consumer health and their medical devices and the pharmaceuticals. There are going to be 2 companies. Kellogg's splitting into 3 companies. This is interesting. Had to do a time check there from my little camera. Time check from the pilot house, 17 minutes, 30 seconds in. So Kellogg's, check it out. They're splitting into 3 companies. Let's go through all 3. And now so when companies do this, this is going to be supposed to be wrapped up by the end of 2023. They will give just a generic name to each company to talk about them. So the first one is called Global Snacking Company. And this is products we all know. These are a lot of their heavy hitters, from Eggo to Pringles, Cheez-Its, Pop-Tarts, your Rice Krispie Treats, your Nutri-Grains, your RX Bar, Crave, Crunch Nut, the Corn Flakes, Cocoa Pops, that kind of stuff. That's all their global snacking. Much like PepsiCo into the big snacking, I think this is probably going to be the most profitable. It's going to have the biggest upside, I think. Likely from what I've read, it's going to have a lower dividend yield to start, but it's going to have more upside. So I think this one looks interesting, and I'd love to know what all you people think. And leave a comment below if you're on YouTube here. For the global snacking, what are you going to do with these 3 if you are an owner of Kellogg's, as we are in our retirement account? The next one is the North America Cereal Company. So this one, I think, looks like it could have the highest dividend yield, but it's likely going to have stable cash flows that aren't going to just be able to crush the growth because it's a saturated market. And these are your cereals, right? Your Raisin Bran, Corn Flakes, Pops, Rice Krispies, Fruit Loops, Frosted Flakes, Frosted Mini Wheats, Apple Jacks, Vector, and the Bare Naked brands. Oh, and Kashi. I think that was a Seinfeld one. Where are my Seinfeld people at? You know that one with George Costanza's dad. Is it Kasha? Oh my God. We have fun here on the channel. And then we move on to the more, I don't know, boring. This was a hot market for a hot minute, right? The plant company. It's called Plant Co. I think they should just leave it and call it Plant Co. So Plant Co. was responsible for less than 5% of Kellogg's earnings last year. They own Morningstar and Incognito. Morningstar had the highest share and household penetration in the frozen vegetarian / vegan category. I always love talking about that frozen penetration we got going on here. Now, yeah, I don't think they're gonna have any kind of a meaningful dividend if they do pay one. That is less than 5%, and that plant-based market, I mean, is that really taken off? Is that really going anywhere? I don't really see that plant-based market going anywhere big. It was with Beyond Meat, but again, that was part of that IPO craze, which, dude, that's really tallied off, hasn't it? Remember when SPACs were a thing? Oh my goodness, every day there was SPACs. I remember people on YouTube, the SPAC man, and SPACs were everything. And I'm just like, it's a shell company. If you don't know, a SPAC is just a group that has money and they have to buy another company by a certain date. It's like a way to circumvent the IPO process where companies have to go on a roadshow and present themselves and talk to banks and get them to issue share. It's a whole big process with good reason, but IPO is kind of like circumventing that process. So anyway, with these three, I think they were dragging Kellogg's down, and it's kind of obvious if something isn't working, kind of like Johnson & Johnson with the consumer health. I think that's why they're splitting off that consumer health segment, because it isn't a core part of their business. I think it was like 14% of sales, roughly, somewhere around there. And they're just putting it in its own thing. Let people that want to invest just in that, do in that. Same thing here. I don't know. I could see the Plant Co. being bought up by another conglomerate. I don't think they're going to mind if somebody acquires that. It might be a target acquisition, as does the cereal brands might be as well. But that one might be a little bit harder. So I think we would not be surprised to see, Plant Co. acquired. And speaking of acquisitions here, I love Tales from the Crypt. Who else is a Tales from the Crypt fan? I love the Crypt Keeper. Big fan of John Kassir. Shout out John Kassir. If anyone knows him, I'd love to have him on the podcast. Do an intro for me. Ooh, that's an idea. Anyway, last and but not least, Mondelez. They said that they are buying the energy bar maker Cliff Bar for $2.9 billion. Right away, I was like, is Cliff Bar a $3 billion company? And the answer is an unequivocal yes, they are a $3 billion company because Mondelez paid $3 billion for them, which goes to show you can value something at whatever you want, but in all honesty, I don't care if it's a baseball card, if it's an old sock, if it's a company, whatever somebody is willing to pay for it and does pay for it, then that is what its true value is. So they're buying Cliff Bar and Company for $2.9 billion. So that is expanding Mondelez's global snack bar business, and they're going to get the Cliff Luna and Cliff Kid brands bars. And if you don't know, Mondelez was broken off from Kraft Heinz. Was it just Kraft back then? We'll just say Kraft to be safe. So that was the whole, I think, Warren Buffett 3PL, that whole thing. I think they merged they merged Kraft and Heinz, and then I think they broke off, right? They spun off Mondelez. That was like the sweets, the candies and ice creams and stuff like that. They wanted that in its own thing away from Kraft Heinz. So that's where we're at. Tomorrow again, market as Friday, I've been having trouble selling options. I did sell a NEO option covered call that was called last week at $20. I got a little cute. I saw resistance on the chart and it broke through resistance. I should say up that way, broke through resistance. Hey, what are you going to do? Now I'm waiting for it to come back down so I can sell a cash secured put. I'm looking at the chart again. Looks like it's going to start dipping down. So I'll be selling a CSP for that most likely next week. And yeah, hey, I also bought PepsiCo to sell covered calls on, right? And I've been a little bit of a chicken for that because, it's human nature. I want more. And the higher you go with the strike price, the less likely it is to get it called away from you, but the less you're going to get in premium. So with Pepsi, I've been a little bit of a chicken. But what are you gonna do? I don't know. It's okay. Let me know if you're selling cash secured puts or covered calls on anything. I'd love to hear what people have that in their wheel strategy. And right now, actually wrapping it all up with Altria. The reason I don't have 100 shares of Altria is because I had sold a covered call on them, and they were around, it was at $52.50 per share. So I got $5,250. Yeah, from Altria. And now it's just way down. But I instead sold a cash secured put, not fully expecting it to hit on Intel at $47. That did hit. So I'm kind of stuck with Intel. That's where that money's wrapped up at. But you know what? Hey, it's okay because I'm still getting the dividends. I think I still have 25 shares in the bridge portfolio of Altria. But we're going to keep on keeping on, investing, going for the long term. That's what we're doing around here. And I'd love to hear your goals, because if you don't have a goal, then you're just, you're spinning your wheels. And we don't know what the market's going to bring, but I'm looking forward to it. And I don't know, guys. I love you. I thank you for sticking around, sticking with it. We're going to have a fun trip. I may be doing a live stream. Well, I will be doing a live stream one of these mornings when we're in the Ozarks next week, because I will be traveling over the weekend. So I will find a spot. I'm bringing the laptop. It's going to be probably a bad video, but I want to chat with you guys, and I want to hear what's going on with you. I want to hear what you're buying. Last live stream we did, a lot of people were buying Lowe's, which again, company that I'm really, really liking, and trying to shift more into buying some of these lower yields, but they have such high growth rates, because over time, man, that's really going to be just rocket fuel to having that big fat yield on cost. And I love that. That's what I'm going for. We're not money hungry. We just know that money gives us options, and options are what we want in life. The more options, the better. So thank you for hanging out. And for those of you on the podcast, the sad guitar. So long, everybody.